Yeah, I'm supposed to stop sharing. I
So
see.
the essence of this poll that we just did, like I said, is just so that we have the right mindset, and then just to tell that, oh, what are the things you're doing well or you're not doing well right now. A common mistake that many business owners make is they do not accrue for their salaries. So yes, your business is unable to pay you right now, but have an accrued expense for that. So that your business knows that, oh, you owe me this money. At some point in time when you're able to pay me, you will pay me. It's not that, oh, when investors come into the business and they're asking you how much have you been able to pay yourself, or what has been the level of your expenses, and you're saying all the expenses aside salary is this. No, investors don't want to know that. They want to know everything. They want your books to be properly done. So thank you. Thank you once again for participating. So we'll move on quickly um, to the introduction slide still. Thank you. Yeah, like I said, um, the topic of today is called differentiating between cash flow and profits, And it's very important that businesses have like a very solid structure around their bookkeeping system. This would help them with the general success of their businesses, and also to ensure that there's sustainable growth as they move up, as they scale in future years. Secondly, understanding cash flow and profit is very essential for sound financial decisions. You need to be able to understand the timing between when you're being paid, when you need to pay your vendors as well. It's very important to be able to plan your cash flow, how money comes in, how money goes out, and the impact on your business. And then to build legacies, we need to maintain structures. It is very, very key. Just see your business. You have to see your business as something that's going to outlive you, and not something that will just be small forever. You have to think big. Lastly, I wanted to share this result of a survey that was done by EY just last month. And that survey showed that, the 500 largest family businesses generated about 8.8 U trillion, like US dollars trillion. And those businesses,
What happened?
the 500 businesses employed more than 25 million people across 44 jurisdictions. You know, quite a number of these businesses, participated in M&A activities within the last 2 years. And lastly, more than a third of these businesses have a legacy that has been extending beyond a century. I would like to also mention the family businesses. They are very common. You have the likes of Walmart. That's a family-owned business. It's owned by the Walton Group. You have Volkswagen. You have several businesses within the food and beverages industry, within the car automotive industry, across different industries. Those businesses are family owned. And when I say family owned, they were started by family members, but they grew and they've now become like conglomerates. Imagine how big Walmart is right now. You go into any Walmart store in Canada or in the US, like who would have thought that a particular family started that business, but see where they are, see the journey. So I want you to think of, okay, yes, I'm starting this business right now. It could be jewelry, yes, but this jewelry business can just become, the next jewelry store, or the next you know, pop-up store, for lack of a better word. So that's why I wanted to share this survey result with us, so that we think big, we look beyond the now, and just see how far, like the possibilities that we can have, or we can see in our businesses in future years. Moving on to the next slide. Here, I'll just be defining what cash flow means. And cash flow simply means the total of amounts of money, the total amount of money that is being transferred into and out of your business. It means what's the cash I'm taking out to pay for, salaries, my workers' salary, or to pay for supplies, or to even, purchase something from my vendor, and how much am I like is coming into the business as sales, as revenue. How much are customers paying me right now? And we've got three major types of cash flow: operating cash flow, investing cash flow, and financing cash flow. Operating cash flow, that's the basic, it's used for, day-to-day businesses, day-to-day operations rather. So operating cash flow just focuses on what's the sales like, what's my rent, what's the salary, what you do regularly. That's the operating cash flow. Investing cash flow is the money that you use to purchase long-term assets. You use to purchase your equipment, you use to purchase properties, or is the money you get, and it's two-way, out and inflow, right? Inflow and outflow. So the money that comes in under investing cash flow is what you get when you sell long-term assets. You sell properties, you sell like old equipment that are no longer functional, you don't need them anymore, you need to upgrade. Those are that's what we call investing cash inflow. Then the last one is financing cash flow. That's the form of equity. That's money that you get from investors to be able to, expand your business or to even start your business. The initial capital that you even used when you were starting your business, maybe business registration, buying, a few goods, the money that you spent is classified under financing cash flow, is what you use to finance your business. And I don't know if you've heard this before, but cash flow is king. It's a common saying. Cash flow is king in any business. And that's because cash flow is the bedrock for which business meets their obligation. So if your business does not have funds, does not have cash in it, and it cannot provide services, it cannot, supply goods. You need money to, talk to your vendors in China. You need to pay them. So cash flow is the bedrock for which businesses meet their obligations. It's very, very important. A company, a business cannot operate without cash flow. It is very, very important. You cannot do anything without money. It's called ego, it's called owo, it's called kudi in different languages, but it is king in the business. Then we'll be discussing what is profit on the next slide. Yeah, so profit is simply defined as the excess income after all expenses have been deducted. Remember what I said is excess income, not excess cash. It is called excess income that you have earned after all your expenses have been deducted. And how do you, classify profit? You've got gross profit, you've got operating profit, and then net profit. Gross profit is, oh, I sold this. How much did it cost me to sell, to be able to sell these goods? So, for example, it's a food business. Somebody placed an order for meals. You bought the ingredients, you bought oil, you bought gas, everything. That's your cost, the cost that you used to be able to fulfill that order. So the sale amount that you get, maybe $100, and your cost is $50. You've got like a gross profit of $50. Operating profit is the gross profit that you had gotten when you made the sale, and you deduct your operating expenses. Operating expenses in this case include rent, includes salaries, it includes what's it called? Subscription. Sometimes you subscribe for certain things. So all those other things that are not directly, impacted, or they're not directly attributable to that good or the service, all those ones are classified as operating expenses. So maybe like what example again would be logistics. Yeah, that's part of operating expenses. You pull that in the bucket of operating so that you understand what is then your operating profit. Then lastly, we've got net profit. Net profit is when you deduct all other expenses and taxes from your operating profit that you had initially calculated. So gross profit, just to summarize on this slide, gross profit is shows the performance of your business. It indicates production efficiency. Then operating profit, it measures your core profitability, while net profit is the bottom, is whatever you have after you've paid the tax man, after you've, paid like interest, interest payments as well. So that's like the bottom line, whatever you have after you deducted every other thing, that's the net profit. What's the importance of profits? Profit helps to show you the performance of your business. It tells the story about your business in measurable terms. So somebody comes to meet you and say, oh, you've been in this business for 5 years. Oh, tell me the story about your business. You have to speak numbers. You have to say, oh, yes, in the first year, I started this business, or we made just 50K, but in the second year, profit grew by 50%, it's been growing by 20%. You have to tell the story about your business. You have to use numbers to tell your story. So profit would, that's what major investors like to see, as this business being able to generate profit over a period of time. Thank you. Next slide, please. Yeah, so the key differences between cash flow and profits. Like you see here, cash flow majorly just tracks your cash movements, what is coming in, what is going out. And this is where quite a number of businesses make the mistake. They see cash flow and say, oh my God, I'm making so much money. My business is thriving. No, hold up. Your business may not, let me not say it's not, but it may not be thriving. You need to chill. You need to look at these numbers properly, because the fact that cash is coming in does not depict profitability in any way. And then profit also does not necessarily mean that you've got cash. So your books can be showing, oh, I'm making profit, but you're like, where's the money? I can't see it. Because they are two different things. And that's why you got like cash flow statement, and then you got the income statement. Income statement is where you report your profit. Cash flow statement is the one that shows the level and the movement of cash over time. So you need to understand that because I'm generating cash does not necessarily mean that it's profit. Your numbers may look great in terms of profit, but then the business is running low on cash to pay suppliers or even to pay salaries. Yeah, and so they are totally different. So to differentiate this, when you make a sale, you get you most likely will get cash from your customer. But then what if your sale like credit terms on that sale? Maybe you're like, oh, just to make the customer comfortable, depending on the business that you run anyways. You can say, oh, okay, don't pay me yet, or pay 30% yet for now. Then when you use this product and you think it's good, you can pay the balance. Different businesses have their credit terms. So if the customer does not give you the money immediately, it doesn't mean that you haven't made the sale. You have made the sale. That will be in your income statement. It goes in as sale. But your cash flow, you cannot say you received cash. So I don't know if we get that. That's a major difference. Cash, you collect the cash. But in terms of your sale, you record the sale once you make that sale. Once you probably send an invoice. Once you send your invoice out, there's a sale. But doesn't mean that there's cash until the customer pays you and provides like proof of payment. That's when you can recognize cash. But once you make a sale, you've made that's recorded, and that impacts your profits. And same thing, your suppliers come to you and you want to you go to them, you want to buy stuff, you want to place an order for stuff. Some suppliers are gracious, they've got credit terms as well. But once they give you the invoice, they give you the invoice this time around. You get it, you put it in your books and records. You recognize the purchase, you recognize the cost, but it doesn't necessarily mean that cash has gone out, right? So the timing of when you pay or you receive the money, that's what determines your cash flow. But once that sale is made or once a cost is recognized, then that impacts income statement, and from there we're able to determine what level of profit we've earned so far or not. So just to make you understand that you make a credit sale, you don't have cash, but you've got sale, you've got revenue. Your supplier gives you goods on credit, you've recognized your cost, but actually you've not paid yet. So you need to be able to tell that difference and not be swayed by, oh, I've got so much money now, I can blow it up, I can spend, I can do this, but then forgetting that these things are different. And if you don't take precautions, this not like, so when I say if you don't take precautions, if you do not plan appropriately, financial planning, if you don't do your budget properly, the business might run into problems later, that you might not be able to fix. So we have to be very mindful and not confuse cash flow with profits. Next slide. Why does differentiating cash flow and profit matters? Why? Number one, because business need enough liquidity to cover their expenses. You need to be able to time the liquidity of your business. You need it. If you misinterpret cash flow and profits, that would result into poor financial decisions. So you need to know, the liquidity status of my business. Am I liquid enough to be able to purchase some goods from China or from America? You need to be able to do that so you are not in a fix, and then you're owing suppliers, you're unable to, customers are asking you, where are my goods? Where are my these things? And then you're like, oh my God, how do I pay? Like, how do I even meet up with my obligations with the vendors, right? So it's very important that businesses, have enough liquidity. So when you're able to differentiate between your cash flow and your profit, you'll be able to tell when you have liquidity that will cover your expenses. It also helps with planning and budgeting. Liquidity is very important for business to cover their expenses, the rents, the salaries, all their immediate costs, branding, everything. So you need to this is one of the importance of cash flow, differentiating between cash flow and profit, because you need to be able to time when you will pay off all those bills. It's going to help you with planning and budgeting. It also prevents business failures due to cash shortages. I said it before, you need to be able to time your liquidity. If you don't, the business is going to run into problems. But then with sound financial planning and budgeting system in place, your businesses are able to avoid debts and also to ensure there's sustainable growth. So in summary, differentiating between cash flow and profit matters so that the business can thrive, so that the business can enjoy sustainable growth. Yeah, next slide, we're speaking to the common cash flow mistakes by business owner. I mentioned that before. Many businesses think that, or business owners rather, they think that once they've got cash on hand, oh my God, they are good. No, it's not. You're not necessarily good. The first point on this slide says that you assume your invoice sales equal cash received. I hope that is clear now from the example that I had previously explained. Because you've sent out your invoice to your customer does not mean that you received the cash. Yeah. Some businesses, once the cash comes in, they're like, oh, let's quickly buy this, let's stock up on this because Christmas is coming, this and that. But then forgetting that there are probably other expenses that will come up. Maybe rent is going to come up at some point in time. They need to account for that. They need to prepare for those expenses. Or you need to be prepared for other financial obligations. Some businesses have got loans, there are interest payments. You need to be able to plan. You need to be able to plan so that the banks don't come knocking and just want to get your collateral. No, you need to be able to plan. Don't see cash as you doing well. Be careful, take, slow down and look at your books. Who are those that I'm owing? When am I supposed to pay them? And don't just go, boom, let me just order stuff because there's a seasonal sale coming up. No, you need to plan appropriately. And then some other emergencies can come up, right? I remember, I think it was COVID period, that there were so many damages. In Lagos, it was the Surulere Mall. So many businesses were affected by that, by the events that happened at that point in time. Imagine if some of those businesses did not have insurance. How would they have been able to repair their stores, stock up again, and all those things? So every business, like we human beings, the way we save, we call it save for raining days. Businesses also need to keep cash, for unexpected events. And being able to save for periods when certain things would happen. Right. Yeah. So business owners also use their funds when there is an order without tracking the inflow and outflow. Sometimes we business owners, we put in our funds into the business, right? We say, oh, I think this going by, social media, whatever, you probably done some market analysis and you've seen that certain things are going to pick up, or you've got the foresight. Somebody tells you and gives you an insight and says, oh, I think you should stock up on this stuff. So you use your personal money to do that. Because you've used your personal money to do that, and then you get sales, like your business generates sales, does not mean that you necessarily have to just dip your hands into those funds and just take your money back. No, you need to track your inflow, your outflow, and ensure that you are not putting your business in a funny situation. So next slide, we're talking about the best practices. What can we do as business owners? How can I help myself? How can I, ensure that my business is not lagging behind on obligations? How can I ensure that, banks are not always like my health is at risk when it's almost 25th of every month. It's time to pay salaries. How can I ensure that my business, is in a good state, is healthy, has a healthy cash flow? Yeah. How do you do that? You have to monitor your cash flow. You have to draw up a plan. You need to have like financial projections. You need to have forecast statements. These things are simple. Don't mind the English that I'm, the words, really, they are simple to do. It's not it's not rocket science. So there are easy things that you can do to monitor your cash flow, ensure that you are healthy cash wise, and you have to make sure that you maintain a balance between your receivables and payables. Receivables here means people who are owing you, customers who are owing you. Payables are the vendors that you owe. You've already collected the goods from them, but you are yet to pay them. There's a timing difference between it. So you need to track my receivables balance. Oh, customers are owing me 100 million. I'm owing my vendor 50 million. Okay, when is the best time to pay? Some vendors can tell you, okay, take the goods for 30 days. Don't pay me. But if you don't pay me within the 30 days, I'm going to charge you interest. So if you don't want to incur the interest, you make sure that you pay them. So you have to do the scale, weigh the cost and effect. Should I pay them within 30 days or should I chill and then I pay them some other time? So you need to adopt that practice of always monitoring your receivables and your payables. And then lastly, you need to adopt the use of financial tools and software to better track your business. You need it. It's very, very paramount. Timely bookkeeping is very important for every business that wants sustainable growth. You need to create for the cash flow projections, you need to create maybe like monthly forecast or even quarterly forecast or even weekly, depending on the size of your business, depending on the volume of your transactions. You need to ensure that you put that system in place, right? And then you also need to make sure that your budget You don't just have the budget for, let me just have it because I'm budget. No, you have to track it. You have to review your budget frequently. You don't wait until there's like a major hit and you're like, oh my God, what's going to happen? How can we fund this? No, you need to set a timeline, or you could say monthly. Organizations do like monthly budget review or quarterly, half yearly, and all of that. As businesses, you need to adopt that too as well. So you need to track your budgets periodically, checking on your business. I would say checking on your business periodically, just like we do regular health check on our bodies. You also need to adopt that as well. The next slide, that's where we're going to be talking about the tools and the software. How can you automate tasks by using accounting software? This is like the crux of this presentation. What are the tools that we can adopt? What are the softwares that we can use, to be able to make better financial decisions for our businesses? And the first tool I would recommend, depending on the size of your business, would be the QuickBooks. It's a software. You can download it on your phone or your computer. You can download it on your phone. It's easy to use. There's the free version, there's the paid version, depending on the level at which you are with your business, right? So you download it. It's so cool that even if you do not have like prior accounting knowledge, right? There's like the way you download the software and then you can read through it. It's so easy to use. It's user friendly. Yeah, I would say that it's very user friendly. QuickBooks and Zero and Zoho Books. Yeah, they are very user friendly. You can so I wanted to explain how you could use this too as well. So I know some people have got like businesses that they can generate invoices. They just have this tool. They have software rather. They have a tool that they just use to generate invoices, and that's it. That's the only thing that it does for them. But regards to Zoho Books and Zero, once you generate your invoice, as long as it's already set up, yeah, you might need someone to help you set it up, but you can do it yourself, to be honest. As long as it's set up, once you generate your invoice goes like the sale amount you put in goes directly into an account or a GL, general ledger, called sales or revenue. So it's your income statement starts to build automatically, right? You can have customer names. So once you try to generate your invoice, it asks you for the name. You set it up there. You have the customer name. You type it in. With that level of detail, you can track how much sale you generated for customer A at the end of a month or at the end of a quarter or the end of the year. So you can generate, like you can be able to tell numbers will tell, then you can also put in like vendors invoices as well. Once you put those in, you plug them in, your cost base gets set up, your purchases get set up immediately. You put in expenses, your salaries, your staff salaries, repairs of motor vehicles, gas for generator, fuel for your car, everything, every expense that you incur is so easy. You just type it in. You can link your business bank account there so that when you slot in, for example, you post a sale by customer, the customer here buys something from you, you put in sale $50,000. It asks you what bank. You choose the bank depending on the way you set it up. You choose the bank, you type it in, and then so it goes directly into that bank. So at every point in time, you can have an idea of how much you've got in your bank account. And when you use these tools as well, you can generate your income statement, your cash flow statement, your balance sheet, just from the tip of your hands. Like you will just be able to see everything on your phone. But then for those who've got like, multiple businesses, corporations, big businesses that are already standard, they can choose to hire like an accountant, a bookkeeper, or once they still have their automated system in place, they can also still maintain the bookkeeping. And I would say as business owners, Learning is very continuous learning is very important. So keep looking out for resources online on YouTube, on Instagram, even TikTok that would help your business as you journey towards sustainable growth. So download all this. I encourage us to download some of this software on our phones, our computers, and set them up, so that we can track our businesses. The essence of having a good all this in place, a robust accounting system in place, is so that when we've got investors, people who are interested in our businesses, they want to see the numbers. They don't just want to, yes, they believe in you, they trust in you, but beyond you, they want to see what your business has been able to do. So this software will produce like several data points that you can be able to. And I also wanted to highlight that this software, these softwares are not just focused on people who provide that sell goods and services. If you're a freelancer, you can also use this as well. So you can tell, oh, where am I even getting my jobs from? Is it from the US or from Canada? You can tell the data points are there. FreshBook, I would say, is very ideal for freelancers. Maybe you do like artwork, knitting, whatever, or you're a publisher like Senior B, you can also track all these things. You want to track it and see, is this business actually worth my while? Is it actually worth my time? And am I able to build a legacy from this business? So, and as your business grow, you decide, what you want to do going forward. So to conclude, yeah, in summary, I would say that as business owners and kingdom financiers, you need to give your business an upgrade and set up structures. We say it often, God is a God of structure. So why not implement that same structure? Or, why not implement structure in your business? Why just leave your business just like, oh, let it go? Let's just be doing it. No, no. You want a business that can outlive you. You want your business to become the next Walmart or the next Volkswagen. So why not put the structure in place? And I would also like to emphasize that business owners, please pay yourself. Please pay yourself. And when I mean pay yourself, you don't necessarily have to, or maybe your business might not have the money yet, but make sure that you put it every month in your records. Like I said, Zoho Books, go there, post it and say salary expense and pay myself 20K. Even if the 20K is still small at this point, I put it in. Let that business know that, yes, you owe me like as a person, but know that, yeah, I'm going to be paid sometime later, but it's like you have to record the value that you put into your business. Make sure that you pay yourself either when you have it now, or just make sure you post it. Let it be in your income statement. Yeah. Your business, I would say, will never remain small forever. You're building a legacy. So think with that, have that mindset as you build structures around your business. And I cannot emphasize this. I don't know. I can't talk about it too much, but you need to make sure that your books are properly kept, and you have to be prepared for investors. It is said that opportunities are taken by those who are prepared, right? And I like to quote an American actor and rapper, Omar Epps, who said that he believes that success is preparation because opportunity is going to knock on your door sooner or later. But are you prepared to answer that? You have to be prepared. You see businesses thriving. You see people building legacies. No, they did not just build it based on wishes. It was built because there were sound structures in place. So please, and please ensure that you put structure in your business. Yeah. So thank you very much. If you have any question, I think we can take it if there's time, and if not, we can answer it
Wow, that
later.
was like loaded. Please clap for her, put emojis, thumbs
Thank you
up,
so much.
like just
Mm,
that was loaded. I feel like I went to school, finance school. crash course 101. That was really good. And I have a few questions. And I'm gonna start with, asking questions while I wait for people to also ask their questions in the chat. So, you've been saying pay yourself, pay yourself. Personally, I think that's one of the hardest things. Like, how do I figure out what to pay myself, right? You also said it's don't just put your hand into the thing. Is me not putting my hand in the pocket, paying myself? Can I just not all the work I've been doing? How do I calculate what to pay myself, right? Um, I personally, have two businesses I'm trying to start off, and right now I just see it as, I'm putting money into it. I'm putting, it's kind of even eating into my own normal, expenses now because I'm just putting money into it. So I think the question is in twofold. One, um, is it better to just put capital and know that this is the capital for this business so that it doesn't interfere with my own day-to-day life, right? And I know that, okay, this is the capital. That's one. Two, how do I pay myself? What do I pay myself? Can I pay myself when the business is not yet making money? Is it fair to do that? Yeah, I think we'll start with that. Thank you.
All right, thank you very much. So capital is different from you paying yourself. Paying yourself, when I say paying yourself, that means salary, right? Capital is the initial investment you put into the business, right? And the essence of capital, right, is we need to put something, you need something into your business. Like when investors want to come into your business, maybe private equity or venture capitalists and all of that, when they want to invest into your business, they're going to, the way it works, your stake might be diluted. So that's where capital comes into place. So they buy into your business. So they are putting another capital into your business. So you can choose to say, okay, I'm going to sell maybe 40% of my stake in this business, and you get your reward at the point when they are coming into the business. So that's different. Yeah. So you can choose, everyone needs capital, right? So capital, like I said, it can be in the form of loans, your own personal funds, but it's on record. So, but the issue is that quite a number of businesses don't have the record at all. So when investors come in and say, oh, I want to invest, and they're like, okay, what's your capital right now? They can't tell. They just know they've put in so much money. So that's the essence of record keeping. You need to have all this recorded. So it's as simple as, I'm going to give an example of food business. You want to start making meals. The pot sets you buy, the gas cylinder, those are capital. So you have to put it in your books and say, oh, I spent 50K for this to buy this asset, but it's capital for my business. And who the business is owing you. So you have that record in place. And when investors come into the picture, they see your capital base and they're like, okay, I'm going to buy your business. Your business is worth $1 billion. I'm going to buy 40% of that, right? And so you take your own 40%, you give it to them, and you collect the cash from them, depending on the agreement, how it is structured. But that's just a simple way of saying it. So when I say you pay yourself, that's salary expense. That's a recurring expense. You need to put it in your books every month. It's when a business is just starting, I would say it's unfair to say you're taking a huge chunk and saying I'm paying myself every month at the detriment of your business. No, don't do that. But you need to put it on record that this business owes me. So there's something you're posting every month saying salary expense, and so debit and credit. I don't want to bottom people with debit and credit, but the way it works, you debit your salary expense account, and then the credit bit, it's supposed to come out of your cash or bank. But because there is no fund to pay you at that point in time, you can put it as shareholders account. So that business is owing the shareholder, who is you. So at the point when there's cash flow, later on, as the business grows, yes, you can then structure and say, okay, this business, you've been owing me 1 million. Okay, I'm going to start taking my money gradually So you start taking it out, but the salary expense has to be there. You need to show that record that, oh, and with regards to how much should you pay yourself, it's a small business. You can't compare it to like structured businesses that, okay, your per hour fee or your per hour salary is like $1,000. You know, you have to say, okay, we're just starting, let's do it $100, but something has to be there, no matter how small it is. Just make sure you accrue salary expense. Yeah. I hope that answers the question.
Okay, that's helpful. I can see Sister Yomi's hand up, but before I call her, I want to ask for permission from sisters. I know we're supposed to close at 8 o'clock. But by show of hands, if you want us to still take this a little bit further, maybe 15 minutes, please let's see hands, just so that I feel like there's quite a bit that is still on for us here. If I see 6 hands, then I know that I have the support. Great, great. I'm seeing a few hands. All right, great. Thank you. Okay, so we'll go ahead. Sister Drapo, we're gonna try and wrap this up very quickly so we don't go over time again. I'm gonna ask one question from the chat before I call Sister Yomi. Please permit me. The question is, how often should we review our books if operating as a small business owner?
I would say at least monthly. Monthly. Just make sure you review your books every month at least. You know, make sure that at the end of the month you have a statement saying your income statement at the end of April, you know, your income statement or your balance sheet at the end of March. At least do it monthly review. Review does not mean when you put the records in, right? Because if you've got the software on your phone, you can, as you're generating the invoices, it's going in immediately. As you're paying the cost, it's going in. But to review, you're looking at what are my numbers at the end of it? What did I want to do? Where are we at the end of the month? So monthly, I would say at least.
So I think from what you're saying, what I'm really gathering is that the discipline to put everything
Yeah.
as is happening,
Mm-hmm.
because usually, I mean, I for one, speaking for myself, probably want to think, okay, let me wait till this time. And then you might just forget some things and some things might slip. So as it's happening, and because you have those tools, those apps, as you are spending, as you are buying, as you are, earning every invoice, just let it go straight in so that it's easier for it to be recorded. All right. Sister Yomi, please. Can I ask you a
Thank you,
question?
Tolu. Thank you. It's really also against the question that you asked. I just wanted to just make sure. So, Esther, you say that, first of all, again, thank you so much for the training. It's so enlightening. So Esther, my question is, so you say that if the company, like a director, because I understand that being a director is different from putting your money asking for salary. So in case we're a director, can the director's um fee be taken out every month? Can it be taken out every month, just like salary, but not paid like the company is owing the director?
Mm.
That's my question. Because in Nigeria, I understand that there are some, if you are the owner of the business, they say you shouldn't be earning a salary. That was what I was told. Rather, you should be on the director's side, right? And then at the end of the year, something you should give yourself something. I don't know whether you can give clarity to that, or maybe I'm the one that doesn't understand it. Thank you.
Okay, so I think I understand your question, and I'll start with saying, if you look at banks, you've got like executive directors and non-executive directors. The executive directors, they work in the bank, they do stuff, they get their hand dirty like every day. So those ones are entitled to salaries, right? Non-executive directors, they come in for meeting, advisory, and all of that. So those ones are not salary based. They get director's fee. When they come in, they sit at the meeting. So they get paid for each meeting. I've forgotten the name it's called, but something like sitting and all of that. So they get that and then they move. Then another thing about being a director, you're getting your hands dirty, you're doing the work. You can have depending on what your business is doing right now, you can choose to pay yourself a small salary. It might not be comparable to what other people are earning in the industry, but you're earning something as salary. But to top that up, you can then set a target and say, oh, if we are able to make so profits, if we meet this target, if we generate this sale at the end of the year, my bonus is going to be this. So that's where that extra comes into picture. So you're not getting huge chunk as salary, but then at the end of the year, once you do your books, you get what's it called? Your profit rather. It's called profit sharing. So you get that bonus at the end of the year. So I don't know if
Okay.
that's your question, but you have to
Yeah,
pay
yeah.
yourself if you get your hands dirty. The MD CEOs of banks are getting paid heavily,
Mm,
so
okay.
don't do that yourself. Thank you.
Thank you. Thank you. Thank you so much.
Yeah.
All right. I have a comment. Adela, I'll come to you, but I have a comment here. Please, do you offer consultancy services to help small businesses get set up properly using the tools you shared for those that are not financially savvy?
Yeah, I
Do
do.
you offer that? I'm sure you can reach out to the person that asked in the chat if you
Okay.
do. All right. So, Sister Adela,
Yes, thank you so much, Sister
your
Esther.
hand is raised.
I just wanted to clarify. So if I have a business regarding the director, so that means it will be important for me to clarify if I am an executive director or a non-executive director. That would help based on my involvement in the
Yeah.
business. So if I'm a silent partner in the business, that would
Mhm.
count as an a non-executive director, right?
Yeah, it could be like you're not a general, you're a limited partner. So that's like you just come in, you drop the funds, and then you leave. So whatever profit is earned at the end of the month or the year, you get, they are usually like stipulated ratios. So you get that part. But if you get your hands dirty, I would say pay yourself. The business has to pay you.
Okay,
Yeah.
thank you.
All right. And to add on top of that question, if you have a board of directors, because one of the things that everybody's trying to do now to set up structures for their businesses is have a board, like an advisory board or just people that you have that help with the business here and there. They don't get involved on a daily basis. I guess they would be non-executive directors. But if you have such board, must you also account for them aside from yourself?
Okay, so you have a board of directors where they are not involved in the day-to-day running of the business. Is that what you mean? So you're not going
Yes,
to
that's what I mean.
account for them as salary, no salary expense for them, but there's something that you can just call director's fee. So it's not something that's a lot, right? Depending on the size of your business, a small business can't pay the same director's fee that banks pay. So you sort of have to like cut your what's it called? Cuts to the fabric you've got, right? And then there's some people that sit on your board. Um, some of them are probably just doing it, just to support your business, right? So it's your initiative. You just say, okay, I'm going to get this person something. They are not charging. They are not saying this is my fee. They don't have a rate card, right? But that expense, you still record it in your business, but it's not a monthly salary
Yeah,
expense you charge or you pay yourself. Yeah.
right, right, right. Amazing. Um, this is so insightful. I feel like it's so timely. And I'm sure that a lot of sisters here too agree with me. I think one of the things that you said that really spoke to me was the fact that all the businesses that we see today as legacies, they
Mhm.
may not have started that way. It was just the fact that from the beginning, they had the mindset of putting structures in place. They had the discipline to do so, and they maintained it. And as the business grew over time, because they had that, then they were able to get investors, and the business is what we know it is today.
Yeah.
And then, what you also said about, opportunity and preparation. Um, at the end of the day, I feel like one of the things that a lot of people do when it comes to small businesses is that side also mentality. And I want to ask a question about that. How do we move from that side hustle mentality? I started businesses because I'm just thinking, look, my salary is not doing enough. I need to earn, something on the side. I need to. But as I go into it, I'm realizing that, oh, wow, this thing could be a lot bigger than what I thought. And it's making me slow down and remove my mindset from I want to quickly make money to how do I build something that can outlast me? Because it's not a small thing. It's not, the vision is getting bigger, right? So how do we shift from that side hustle mentality of let me quickly make cash to help support my life to building this kind of structure that you have said? That's number one. Then number two, is it actually okay to have that side hustle mentality? And also, because sometimes really I just want to sell Gary so that because I know where to buy it cheaper and sell it quicker, and I can use it to fund today's needs. I can quickly pay school fees. I really don't have time, or I don't have my life, the needs that I have now does not have the capacity to wait for this structure. I just need to build this. So how do I balance that, right? And as that kind of person that's just doing side hustle, do I really need to do all of these things that you said? You know? Yeah, I think that's my question.
Okay. Thank you. So saying the side hustle thing was not in any way to judge anybody or to make it seem
Not,
like, oh, yeah, it
yeah.
wasn't. It was just okay. We need to see beyond the side hustle mentality. Like it's very important. Um, so I'm going to backtrack to your first question about how do you move from the side hustle, right? Um, yeah, and just build a structure. If you look around, many businesses they fail because there's no structure. I remember growing up, my grandma used to talk about MKO Abiola. How he had like lots and lots of businesses. But I started thinking about it recently, like, okay, where are those businesses, right? Where, I don't know, where's the MKO, the legacy and everything? Do you get? This man was wealthy in his days, so why can't we just see, the long lasting, the legacy, up till date? And it's really sad. But one major thing would be there was no structure in place. Probably when he died, the kids they picked up everything, and then they just went. But if there was structure, right? If there was like proper governance in place, you know, that the business is even more than the individual that set it up. If anyone was misbehaving, not doing what they were supposed to do, we probably would have kicked them out and and putting a competent person in place. So I would say that the same way we look out for like family coach. You pay a family coach, you pay for a sex coach, all those things. You need to also invest in getting a business coach. You know, start start small. Just make sure that like the major thing is just think big, like see the bigger picture. It's a side hustle now. Fine, it's meeting the bills, you're able to do stuff, you're paying school fees, you're doing cash, quick turnaround, everything is going on smoothly. But there's going to be a point in time that the strength that you have to be jumping everywhere might not be there. So you need to start putting structure in place, right? It will take your time. It's going to take sweat, time, energy. But once you start gradually, you have a business coach who is helping you on the side, you're getting better. Like, and most importantly, you have this structure in place, the foundation. That's the bedrock. Just have this structure in place. And your second question, about if you just choose to decide also, right? No big deal about it. If you choose to decide also, it's good. I understand. Like, I don't want stress. I don't want to deal with barbaristics that will tell me that the boss stopped when he was trying to deliver my goods. I don't want to deal with 10 employees who they will just call in sick on a day, like on the same day, you know. They all come with their challenges, but I would say that if you're gonna do big things, you know, you expect big challenges too as well. So so that's it. Yeah.
Wow, that's so amazing. That's so amazing. Please let's emoji claps. That's really amazing. I feel challenged. I feel motivated. I feel inspired. I feel like a lot of us will be in your DMs. Be ready for us. We're going to need the help. And I feel like we've gotten a lot of clarity. This was such a good session. Thank you. Thank you so much. It's very insightful and helpful. If we do not have any other questions, on behalf of TOCI Business Unit, I'd like to say thank you for coming. And thank you to everyone for joining. Hosting this for the first time. My name is Tolu Alabi. I know a lot of people don't know my face. I don't talk much on the group, but I'm glad to be here. And I must say that having a number of people on the group is very encouraging on the call. It's encouraging. It makes you feel like, okay, people are listening. So I understand. So I'll support more. I'll try my best. All right. Thank you all. Thank you so much. Have a great night. Good night.
Thank you so much. Thank you, sis.
Thank you.
To our trainer and our
Thank
participants.
you, sisters. Thank you.
Thank you
Thank you
so
so
much.
much.